How's it going, everybody? It's your boy Stas here. Welcome back to another video, and cheers, by the way. Happy Easter to everybody out there watching. We have a big week coming up this week for stocks as earnings season is officially upon us. We have 5 companies, 5 stocks to break down. In this video, we're going to go over my thoughts, what I'm looking to do, the charts, and of course, earnings estimates, revenue estimates, everything that you need to know. But first, come on, hit the like button. Do not forget to subscribe and join the free email stock newsletter where I send out my top stocks every single week for free. That is linked down below and it's sent right to your email, guys. Again, it's free. Make sure you guys join it. And with that being said, cheers again. Let's dive into it. So we all know at this point, there's no need to harp on it. The stock market has been in a downtrend. Even last week, it was a short week. Friday was off. It was Good Friday. Again, today's Easter. Happy Easter, guys. Hope you're all having a great day with your friends, your family, right? Celebrating Easter. But, last week, we downtrended. We've been downtrending, not just last week, but for weeks at this point, right? And if I show you on the 4-hour chart, SPY, you guys see clearly we're under this 180 SMA. Same thing here on QQQ, pretty clear, right? And if I pull up this 5-day, 5-minute, we were coasting downwards all week last week. You guys know that. So maybe heading into this week with earnings from a bunch of big companies, maybe things will turn around. Maybe, just maybe. Not guaranteed, though, but, that's what one could hope for. But with this kind of market we're in, guys, with the trade war, it's escalating, no end in sight, at least for now, no deals in sight. Who knows? We could be going even lower in the market. You got to realize that. So let's just dive into it. I don't want to get or spend too much time here on the intro. Let's talk about these 5 companies, 5 stocks that I'm watching very closely. And the one that's not on this list is Tesla. Obviously, I'm watching Tesla closely, but I made a video on them solely. I think 2 days ago, we made a dedicated video to Tesla, so make sure you guys go check that one out. We're not going to cover it too much in this one, but we are going to talk about Alphabet, also known as Google, ticker symbol GOOG, because not only are they reporting earnings this week, but they're also one of my biggest individual stock holdings, Alphabet. So let me show you guys the chart quickly. We can see it hasn't been pretty for Google. This stock is down from 211 now to 153. We're down 27% from highs, so we're well in a bear market, and that's with us being up about $14 from the lows. So at one point, guys, Google stock was down 34 to 35%. Think about that. Alphabet here is what we're talking about. This stock was down 35%. And this is one of the most diverse, if you will, big tech stocks out there. We have a lot of businesses within the business. Obviously, we have Google search, advertising. We have YouTube, of course, right? Cloud. There's so much within this Google or under this Google umbrella. And I think this company, man, is a no-brainer to hold for the long term, at least for me. And there are some concerns in the short term with ChatGPT potentially stealing Google's lunch long term, which it might at some point, but obviously Google has its own AI. The search engine is still dominant. It's still being used across pretty much, everybody uses Google in the U.S. In other countries, even more, right? They're using it, and in these developing countries, Google is being used. So it is everywhere. People that think ChatGPT is taking Google's lunch, not quite yet. I mean, do you think people in these developing countries are using ChatGPT or Google? I mean, sure, some of them might be using ChatGPT, but Google is still the broad used search engine, right? The widely used search engine. And that's not the only reason why I'm investing in Google, obviously. Advertising's huge. YouTube in and of itself, I think, is God knows how much value that business holds in and of itself, but probably 700 billion, 500 billion, a trillion, who knows, man. But YouTube is so valuable. So Google, I love it. I love it. And now that it's been down 30%, I have been adding some more to my position, and we'll see how earnings go this Thursday. If the stock gets hit even more, I'll be continuing to buy. So Google, their earnings per share estimate for this quarter is $2.02 versus $1.89 from last year on revenue of $89.18 billion versus $80.5 billion from last year, up around 10-11% year over year. Not too bad, guys. We are growing at a nice clip here on Google, about 11%, which is good considering the size of this company, and again, just how many businesses are within the business, how long Google's been around, and again, the sheer size of it. 11% revenue growth projected is pretty good if you ask me, and again, I think it's a buying opportunity. We took out the lows from September with this recent dump, and hey, if it goes anywhere near the low hundreds, I'll be loading the boat. And in the grand scheme of things, guys, on this 3-year chart, Google is still holding an uptrend. You guys see it for yourselves. We're still well above this 180 moving average on this 3-year chart. So all eyes are on Alphabet, Google, moving forward here. Google and Tesla are the two biggest ones for this week. We have Chipotle Mexican Grill as well, guys. Chipotle is CMG, if you didn't know the ticker on this one. And this stock has been downtrending for months, all year. And the end of last year, we started downtrending. And it seems like ever since they did their stock split, it's been downhill for Chipotle, which that was about a year ago. It was last June they did a 50-for-1 stock split, and it's been downhill since. It double topped, I think, at about $65 to $69. We kind of got a double top there. We hit $69 back in June last year, right around the stock split. We hit it again about 65, 66 back in December. We got double top there, and boom, now we're back in the mid-high 40s. Not looking the best on the chart, but hey, maybe earnings can turn things around. Chipotle's on Wednesday after the bell, and they're projecting earnings per share of 28 cents versus 27 cents from last year on revenue of $2.96 billion versus $2.7 billion from last year. That's up around 9.5% year over year. So the growth has slowed down a lot for Chipotle, and I think that's a big reason why the valuation has been coming down. The stock's been selling off because I think it was pretty overvalued. I'll be honest. And I said this a year ago, right before the stock split. I remember people were asking me, Stas, should I buy Chipotle before the stock split? What do you think about the company, the stock? Listen, I love Chipotle. It's a great product, great business, no doubt about it, but I was telling you guys a year ago, I think it's too overvalued. I'm not touching it. And lo and behold, here we are a year later, and it's actually down like 30% from when I made that video. So it looks like I was right. And I haven't looked at the numbers in a while, but something's telling me Chipotle might still be a little bit too frothy. Maybe not frothy per se, but it's not a great deal yet. If this stock were to get to the 30s, okay, maybe then now we're talking, right? But at this point, Chipotle, there's a lot of competition. The revenue is coming down. I'm sure margins are getting squeezed a bit here with inflation, cost of goods are definitely going up. They've been going up, and there's only so much Chipotle can push that price up, right? So we'll see. We'll see how they go, or how the earnings go on Wednesday. They're after the bell on the 23rd. And we also have Boeing, ticker symbol BA. We have Boeing this week, which this stock, oh man, it's been a roller coaster ride for years at this point. Not just the past year, past couple of weeks. It's been years at this point since Boeing has been all over the place. And I mean, look at this. It was back in 2020 when we saw the big collapse from 450 down to about $90 a share. And for the last couple of years, we've bounced between $90 to $100, $110 as support, and we got to about $250, $275 a couple of times. But really, it's the stock kind of lost its legs. It's been the stock's just been in the gutter for years. And now we got some news regarding China. I think they're not going to be selling Boeing in China anymore. Boeing, yeah, it looks like China's potentially banning Boeing. We'll see how that goes. But yeah, the stock's been all over the place. Earnings are on Wednesday, I believe. Let me double check that. Yeah, they're on Wednesday. In the morning, they're projecting a loss of $1.28 per share versus the loss of $1.13 per share from last year. So losses are getting worse for Boeing. And revenue, it's at $19.86 billion versus $16.57 billion from last year. Revenue's projected to grow about 20% year over year. Not bad, actually. Revenue growth is there. But man, the bottom line looks ugly. They're losing money. They've been losing money, and now they're projected to lose more money than they did last year in the same quarter. Not a big fan. I've never been a fan of Boeing, honestly, to be honest. As an investment, never been a fan of it. And, I'm not planning on buying it anytime soon. This is a stock that I could safely say I'll probably never own. In reality, I'll never own Boeing. And before we dive into the last two here, guys, make sure to hit the like button if you haven't done so already on this video. Let me know your thoughts in the comments. Just commenting, hitting the like button, that boosts the video and the algorithm. And make sure to subscribe. Hey, follow along for more content. That helps too. I appreciate you guys. And cheers. Take a sip of that coffee. Don't forget to take a sip of that coffee. So number 4 is Intel, INTC, which we covered before. Well, we've covered it many times. And I've showed you all the charts. We can see we've been trading sideways for months, almost a year at this point, with support at about 18, 19, 20 bucks and resistance being about 25, 26, 27, and now we're more towards the bottom of this channel, heading into earnings, which are coming out on the 24th, so that's Thursday after the bell. So Intel, guys, it's a make it or break it spot on the charts. If earnings are abysmal, right, if guidance is weak, Intel might fall through $17, $50, $18, which if it does do that, oh man, it might get a lot uglier to the downside. It hasn't fallen through 18 in almost a year. So yeah, if we really get momentum under there with bad earnings, this might be going lower. But the same thing, it might be going to a 3-year low, guys. Holy smokes. But the same thing could happen on the flip side. If Intel does well, it's already oversold. I mean, geez, we're down 30% in the past month. If their earnings are strong, we might be getting that rebound. So I'm just going to, play it by ear. Wait and see what the earnings look like, how the stock reacts. I'm going to set some alerts. I'll put one at mark is at or below $18, so I get triggered if it goes under $18, and I'll do another one at $20. Mark is at or above $20, so we get alerted if it breaks over 20. Maybe if we get some momentum building up heading into earnings and afterwards. So that's Intel, and the last stock on the list, folks, is American Airlines, an airline company. Yes, you heard that right. We got some other airlines this week. I think we have Southwest as well. We might have just had UAL last week. UAL was last week. So airlines are on the watch list for sure. American Airlines is down 50% from all-time highs, or maybe not even all-time highs, just the recent high here. I don't even know what the all-time high is on AAL. Yeah, oh, Jesus. Oh, my God. We're down well over 50% from all-time highs. I forgot this thing peaked well before 2020. We hit $59 back in 2018. So we're down well over 50% from highs, but we're down 50% from the highs earlier this year. Think about that. So AAL not looking pretty. Earnings are on, let's see, the 24th of April. So that's on Thursday. And they're not looking good. I mean, they're losing projected. They're going to lose 67 cents on the quarter versus the loss of 34 cents from last year on revenue of $12.56 billion versus, you ready for this, $12.57 billion from last year. So EPS, the loss is widening, and pretty much revenue is flat year over year, same as last year. And it seems like ever since Warren Buffett got out of these airlines, it's just been a disaster since. Do you guys remember Buffett? I'm pretty sure sold out of all his airlines during the pandemic. Literally all his holdings. I forget which ones he held, but ever since then, it's just been downhill. And he timed it well. I mean, I'm pretty sure he didn't sell at the bottom during that COVID dump. I'm pretty sure he sold out kind of, I forget exactly, but either way, it's down more. Some of these airlines are, at least. They're down more from where they were during COVID. That's crazy to say. That's crazy to think about. So those are 5 companies I'm watching: Google, Chipotle, Boeing, Intel, and American Airlines. And again, there's a bunch of other ones. Tesla is a big one. We covered that in my video 2 days ago, so make sure you guys go check it out. And yeah, I mean, it's going to be fun. Earnings season's back. You know, that's going to throw a wrench into this market that we're in, you know, with the trade war, U.S., China, the, all the uncertainty. Now we have earnings on top of it. I'm excited. I'm excited, guys, and keep an eye on the guidance from these companies. That's key. That's key. So let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe. Join the free email stock newsletter. That is linked down below. And with that being said, cheers. I'll see you in the next video.